How do huge hedge funds like Renaissance Capital and Citadel consistently beat the market? Well, one way is they use advanced AI and machine learning systems, as well as teams of quants or quantitative analysts.
That's my quant.
Your what?
My quantitative. My math specialist. Look at him.
For an individual retail investor, it's really hard to compete with that level of expertise, of firepower, of capital. But with AI systems becoming more democratized every single day, the individual retail investor does have a chance at beating the market, especially given smaller portfolios are much easier to compound and generate higher returns. So in this video, I'm going to show you how to create your very own quantitative trading strategy directly from an advanced research paper to code, to backtesting, and into production in a very simplified and fast way in order to help you beat the market. Now, before we dive in, nothing in this video is financial advice or a recommendation. Always do your own research when trading or investing. With that being said, let's dive in. Okay, so step number one, we are going to head over to this website, ssrn.com. Now, basically, this is a website which aggregates a lot of research papers from quants all over the world on various different strategies. And you can search in this box for example, on specific indicators, MACDs, moving averages, all different types of strategies. In this case, we're going to look at what's called VWAP, and we're going to look at VWAP trading, as this is quite a solid strategy. So you might say, what is VWAP? Well, let's look at the definition specifically. So this is basically just the volume weighted average price. So it's a trading benchmark and technical indicator that calculates the average price as a security is traded throughout the day, factoring in both price and volume. So basically, traders use this metric for trend identification. So if the current price is above the VWAP line, the market is considered to be in an uptrend, bullish, and if the price is below it, the market is considered to be in a downtrend. Now, what you basically do is type that in here and search for different research papers. There's quite a lot here. Let's look at this one, the volume weighted average price, the holy grail for day trading systems. Now, day trading is not something I usually recommend on this channel. We tend to look at more multi-month time horizons. However, for the purposes of this video, let's look at this if this quantitative strategy could actually work. So diving into this research paper, we can see, okay, it's quite an advanced research paper, fully detailed. It's got references. It's very academic. Let's look at the returns. Okay, so according to the study that's been done here, our findings reveal that an initial investment of $25,000 in this VWAP trend trading strategy on QQQ, which is the tech index, would have grown to $192,000 net of commissions, yielding 671% return. Now, they did this over a period between 2018 and 2023 as the primary backtest. The performance had a max drawdown of just 9.4%, which is pretty incredible. Sharp ratio 2.1. In contrast to a passive buy and hold in the same index, that would have returned just 126%. So basically, you're getting 6 times more than you would have had with that same strategy. Now, if you used a leveraged ETF on QQQ, which is 3x leverage, they observed extraordinary outcomes. So $25,000 turned into $2 million. Net of commissions, over 8,000% return. Now, of course, guys, remember, none of these returns are guaranteed, but in the backtest that they've done with this particular strategy, those are the type of returns that they got. So let's code this up very simply, and let's test it. Okay, so simply click download this paper right here, and it will download, and you'll get the full research paper right here. In this place, it's from a company called Quant Trading Research, Peak Capital Trading. And yeah, you can see it's pretty detailed, 26 pages of exact visual examples. Okay, so you can see how this strategy works. So it basically waits for the first 1 minute candle to close, which is at 9:31 a.m. Eastern time. If the price is above the VWAP, they go long. If it's below the VWAP, they go short. So it's pretty simple. And then there's a stop loss. 1 minute candle closes through the VWAP. Position is held until stopped out or market close. Always in a position. 100% of equity per trade. Commission, instruments on QQQ or the levered. And the period, between 2018 and 2023. I'm guessing all of you may not be coders on this channel, and I know I'm not personally. I'm more of a tech guy, but I wouldn't say I'm a coder. So what we're going to do is we're going to simply go into either Claude, you can go into, or Openclaw. In this case, I'm going to use strategy paper and code it me into a optimized trading system I can backtest. Okay, so next, once that has coded that up, it could code it up into, let's say, Python or PineScript. We then head over to a platform. So we could use multi-charts to backtest the system. I'm on a Mac, so I'm not going to use multi-charts because it doesn't work with Mac. But we can also do this in TradingView. Okay, so there we have it. The system has now coded up our backtesting strategy. Okay, so there we have it. The system has coded up our strategy based upon the research paper, and we have a few different versions. So we have a Python script, which can use our command line interface backtest engine, 382 lines. Here we have it here, run from the terminal. We have our dashboard Python script here, which can use interactive controls. We have one for TradingView, which is a Pine script, load this in TradingView's Pine editor for visual backtesting. And we have a trend trading regime full docs. Now, I'm simply going to say, given we have the TradingView MCP set up inside Openclaw, I'm simply going to ask this to run the strategy directly inside TradingView. You could also download the script with Claude and do it that way manually in TradingView. Just one potential limitation of this particular strategy, which is not, again, financial advice, but it says it only wins 17 out of 100 times. So my thought was that potentially you could lose all your capital before profit. However, when I checked the full probability, so the probability of consecutive losses with the paper, you've got 5 in a row, 40%, 10 in a row, 20 in a row, 30 in a row. So with 22,000 trades, which were in the back test of the paper, the strategy incurred 40 to 50 consecutive losses. However, that only gave a 19% drawdown due to position sizing. So it's actually not as risky as it seems. But either way, in this video, it's just an example. Okay, so step number 3, what we want to do now is connect our Openclaw or our Claude directly to a broker platform that can then execute trades as we like. So in this case, we're going to use Alpaca, which is an algorithmic brokerage platform. It's completely for free. And we're going to use a paper account, which I highly recommend. None of these videos are financial advice or a recommendation to do anything, but it does make sense, of course, to use a paper account to start out with any AI trading system, to learn the system, develop the system before you switch it over to live capital. I'll give you the link for this MCP server. Simply copy that MCP server, head into your Openclaw or Claude and click install. It will then install all the dependencies that you need for that particular system. Now, next it will ask you for your Alpaca API endpoint and your secret keys. So what you need to do, again, go back into Alpaca, account management on your paper account, which you've created specifically for this trading strategy. So I recommend calling one, for example, crypto trading with Openclaw or crypto trading with Claude. Copy those keys into Openclaw or into Claude. Now, people will say, okay, this is a bit of a security issue here. What you should do is rotate your keys and change your keys once you've done certain experiments. And just be aware that in this case, we're using a paper trading account. These systems, you are giving those your keys, but if it's paper trading and you change the keys quite regularly, you should be okay. We've backtested the strategy, we check it's all good. We then export it into Alpaca and we have the system running automatically. And really, there we have it. Now, of course, there is a lot more to it to really do it in a robust way, but I've given you the framework so you can set up these quantitative trading systems and aim to beat the market. Okay, so if you want to learn more about how to use AI with investing, I recommend checking out our AI options trading system and course. So this basically is a learning journey and AI investing system to teach you how to earn between 2 to 4% per month, which is 20 to 40% returns per year in an extremely low risk way. Now, of course, this is not for everybody. It's only for those select investors who fit our criteria and we think have the potential to use the system and be successful in the market. If that sounds like you and you're interested in checking it out, apply via the link in the description below, and maybe we'll be speaking on a call and see if it's right for you. With that being said, see you guys in the next one.